You're listening to the Big Cast, your source for the latest in financial technology. Brought to you weekly by the Best Innovation Group, with your hosts, John Best and Glenn Sarvati.
Welcome to another edition of the Big Cast. My name is Glenn Sarvati on behalf of the Best Innovation Group, where we like to do cool things with financial technology. And today, the Best Innovation Group Grand Poobah, John Best, and I are sitting down to tackle a couple of the recent topics that have popped up in the news. Thought we'd get a little bit deeper on those. The OpenAI collaboration with Walmart, which opens up all kinds of interesting possibilities and kind of new avenues of where generative AI may be going. And also a recent hiccup in the stablecoin market that you may have heard about and kind of came and went pretty quickly, but I think still has some pretty serious implications that people need to be aware of. So we're going to be getting into that in just a few seconds. Remind you that you can always find out more about the Best Innovation Group by checking out our website, big-fintech.com, with all the services the Best Innovation Group has to offer, including bigmerger.ai. And we know that there are plenty of mergers going on in the industry these days. Best Innovation Group's come up with a pretty spiffy way that you can tackle that at a faster rate and with a lot less pain. And guess what? It involves leveraging artificial intelligence to do that. So you can find out more by checking out the website. You can also find out more about what's going on in the credit union world if you join us on our, I'm going to call them monthly, they seem to be kind of falling into that cadence these days, our CU Digital Town Halls. The next one takes place on Wednesday, November 19th. Those are live. You can join us via Zoom. It costs nothing to join, but you do need to register in advance. Wednesday, November 19th at 3 p.m. Eastern, noon Pacific. It's a group of, depending on the week, between 30 and 50 usually people, experts in the credit union space and practitioners from around the industry, just comparing notes on the hot topics and exactly what they're seeing in the industry and sharing best practices. Tends to be a very lively and interesting conversation. We hope you join us. cutownhall.com. If you get a chance, take a look at that. You can hear some past sessions. They're archived there. And hopefully you'll join us on the 19th. Drop a note and request an invitation. A couple of other stories that I've been looking at this week. 13,900. I love that number. It is the number of comments that the CFPB received on their open banking rule revision. Now, remember, we went through this exercise before, and I believe it received the open banking rule under the Rohit Chopra administration, I'll call it, under the Biden administration as well, that presumably was actually finished, and the final rule was issued back in October of 2024, before it pretty much got put to the side, ripped up, put on hold, reopened, whatever you want to call it. I think there was like 11,000 comments or something like that last time. This time we almost hit the 14,000 mark. So people still have a lot to say about it, apparently. I've only started to kind of dig into it. Of course, the vast majority of those are the boilerplates where you can just click and somebody auto-generates something on your behalf. But there's obviously a lot of good stuff in there too. Need to dig into it. I'm looking at this open banking piece at this point as a real Rorschach test. In terms of what you see in it, whether it's good, bad, what it's likely to impact. A couple of fairly predictable ones, but I thought were worth pointing out. And these are a courtesy of our friends at Banking Dive, who also brought these to the top of the stack. Apple, not surprisingly, issued their own comment letter. They encourage the CFPB to continue with actually enacting Rule 1033 to enforce data sharing across companies. But with a little caveat here, they want to make sure that the data provider category, the people who are responsible and obligated to provide that data, they say it should not include digital wallets. Okay. Maybe that sounds like a one-way street to me. I don't know. It's kind of interesting to support the rule on one hand, but don't let it apply to us. So be it. It's an interesting conversation, and I'm sure everybody's got their own vested interest in this one. Senator Cynthia Lummis from the state of Wyoming, which we know is very, very proactive in the stablecoin and digital asset space, she actually put out a word which, to some extent, actually said something positive about the original Dodd-Frank Act, which is a pretty radical approach right now these days to a political statement in the Senate. And she said that this whole notion of data sharing was a bright spot in the Dodd-Frank Act. So she really encourages us to pursue down this path so it doesn't stop the innovation of digital assets. So it wasn't that long ago. In fact, I don't think there was a whole lot of stablecoin and digital asset conversation in the 1033 comments at the end of 2024. Suddenly, with the passage of the Genius Act and everything else, we've got a whole new avenue that's opened up there. So I don't expect anyone to go out and take a look at all of those comments, but I'll post a link to where you can find them. I believe you can search on individual companies, or you can search on America's credit unions or the American Bankers Association or the FinTech Association, see what everybody has to say that they kind of put in their 2 cents on. If you have any comments on it or find any that you find particularly interesting, drop me a note. I'm going to do a little bit of weeding through it myself, but I'm curious what else anybody finds out there. Other story that I thought was interesting that popped across my desk this week was a press release from Zelle saying that they are going to leverage stablecoins. Well, I think at this point we're hearing stablecoin about as much as we hear artificial intelligence. Zelle starting a stablecoin initiative to enable international payments. Up until now, Zelle has been a U.S. domestic only solution. They're now looking to expand that internationally, and the avenue through which they would do that would be stablecoins. I have lost count at this point of the number of stablecoin initiative announcements. Everyone has something going on. I want to be clear, as far as, at least as this announcement shows, it doesn't say that Zelle is going to issue their own stablecoin. It just says they're going to leverage stablecoins. So exactly how many different stablecoins we need out there is going to be interesting, but it's starting to feel a little bit like I say. Everyone's going to use the blockchain. Everyone's going to use AI. Everyone's going to use stablecoin. Great stuff to explore. I'm waiting now to see, whether we talk about the trough of disillusionment and the old Gartner hype cycle, or whatever else it is. I'm kind of curious to see the next steps, and that should be fun to see where that one's going. I've got a blog that is looking at the continuing advancement of real-time payments, but some interesting twists in the volumes that came out in Q3. I'll post a link if you want to take a look. The bottom line is they're still growing, but they're growing with some different twists in the road that I think are worth looking into where we'll be going next. And speaking of stablecoins, let's jump into I think that's the first one that John and I actually tackled at this point. As I said, we tackled a couple of the topics that we were just talking about now. And again, it's amazing how fast the news is changing and evolving these days. But these were headlines, maybe 10, 12, 14 days ago, and they feel like forever already. But have a listen to hopefully a couple of things that have been on your mind as well. I really wanted to talk to you about the whole thing around Athena and USD as a stable coin that if anybody saw, and it's a really kind of loaded topic right now.
Well, stable coin's a strong label coin.
And I've seen people say, hey,
maybe that's what should be called label coin.
It wasn't a stable. I mean, that's the thing.
Well,
back to the Genius Act and everything else.
Yeah, it's defining what a stable coin is. And I think there's some nuance to things, right? Like,
let me back up real quickly so people kind of have the context.
Yeah. Give everybody the backstory.
Athena, which goes by the name, the moniker, if you're looking it up online, is USDE for Athena, is yet another. Actually, I believe it's the third or fifth largest by volume stable, again, quote unquote, stable coin that's out there. They had a incident, for lack of a better way of putting it, last Friday. Well, depending on when we're playing this, Friday the 10th, where their value blipped all of a sudden. I mean, it's a stable coin that's been steadily at $1, as it's supposed to be by definition of a stable coin. It very briefly dropped for, I forget how long it was, to 65 cents, which is a huge deal. I mean, that's where Terra Luna kind of fell out of bed. Now, as things further were revealed, this happened only on one platform. It happens to have been the Binance platform, which is the biggest, if I'm not mistaken. So, that's a pretty big deal. And apparently, from what I'm told now, it was arbitraging, as you put it, in kind of a nice way, exploiting, I guess would be another way of saying it, a known shortcoming, I'll say, not a bug. They're very clear in saying it wasn't a bug, but a suboptimal programming aspect, which they were already in the process of changing. And then the fact that we had the announcement that President Trump was again thinking about throwing a 100% tariff on China roiled the markets in just the window that allowed people to say, maybe there's something we can do with this. And I know that Bitcoin took a hit around that same time, which I think played into it as well. With
Yeah,
that
ETH dropped, everything dropped a bit. And the government shutdown also. Interestingly, it appears to be somewhat of a coin flip, or at least it wasn't before, but I think I don't know, the other factors are causing some other things. But it used to be, the government shutdown seemed to drive crypto up. But in this case,
the shutdown had been in place for the shutdown had been in effect for 10 days already. And then all of a sudden it was a major, bubble or burst. I shouldn't say bubble, but a lot of volatility all at once at a very specific time on Friday, which happened to coincide with that tweet about the additional China tariffs.
Well, what's interesting is I'm trying to decide how you devalue it, right? Like, so how did it drop to 65 cents? Like, what is, and you have to think about that in different terms than you would think about it with regard to, say, a stock or, a commodity, right? How does a commodity get devalued? Well, it could be that there was an overabundance. And so that can devalue a commodity because it's a supply and demand. It could be that there was, some sort of external factor, weather or something that messed up a crop or whatever. But how do you devalue a stable coin?
My understanding, and again, this is well beyond my level of kind of the engineering side of things. Again, there was a shortcoming in terms of the way the quote system was working. So it almost sounds like high frequency trading, where some folks were aware of this and were ready to pounce. And when they pounced, it just kind of exacerbated the issue for a brief window. It reminds me, and then this is, again, they point out it's bounced back and it's right back at $1. And, let's just never pay attention to that. It just happened in the past. It was a brief thing. Obviously, anybody who was in the middle of that and traded in that little window has some pretty serious either celebrations or gripes, depending on which side of the trade they were on. But it reminds me a little bit of what happened with USDC for different reasons, but they actually very briefly lost their peg as well back during the Silicon Valley Bank crisis, because the word got out that USDC, some of the backing that Circle had for their stablecoin, was sitting at Silicon Valley Bank, which was suddenly in danger of going under. As it turned out, they were very good with their communications, and they quickly established that, yes, we have some money there, but it's not enough to alter the equation of our fully backed coin. And then Silicon Valley Bank wound up being rescued. So the two of those went away, kind of like the same thing here, but there were at least quantifiable reasons why that was the case that were more broadly in the market. This one's a little more mysterious and does tie to technology to some extent.
Yeah, well, and the thing is, the DPEG, like you said, it was brief, but people obviously knew. And as you mentioned, Silicon Valley collapsed, and that was 3.3 billion of Circle's funds, and everybody panicked and said, "Well, I'm going to sell it off, and at least I can get 88 cents on the dollar." And so they sold it off. So what caused these people to panic is, I think it came out that they were hedging.
And that's the other piece that I think we need to talk about, is we've kind of put the stablecoin piece in parentheses, in quotation marks. Unlike, and again, if I go back to the Genius Act, the definition of a stablecoin, and again, the Genius Act has not been fully implemented, but it says, thou shalt back your stablecoin with 100% US dollar denominated, low risk. It could be treasuries or something else, but dollar denominated assets. As it works,
such that if someone said, just like a bank, I want my money, you should be able to give it to them.
Mm-hmm.
As long as everybody doesn't come at once, is the old saying. But in this case, it should be even if everybody came at once.
And you still got the discount window to back you up on things like that.
Right.
But in this case, as it happens, the Athena coin is only backed, as I can tell, someplace between 60 and 70% by US dollar assets. And the rest of it is with Bitcoin and other things along those lines, which may maybe explain why it fell to about 65%. People gave it a haircut directly to the amount that was actually
right. Because that's exactly it. There was, it looks to me like the way they had it designed. So the way these things do is the oracle that gives you the price is an order book, right? Because again, supply and demand, right? So how much
That's
do
what
I
I heard.
have?
Their oracle was tied to not the state of the art way of doing it. That was what I've heard.
Well, it was referencing its own order book. And so that can, if enough people, if it starts to get stressed, then that creates a race condition against the book.
Yeah.
And so I think that's what happened. But it's pretty technical. But what I think that people should take away from this, in my opinion, is don't assume that somebody who says a coin is pegged is a stable coin, for one thing, because pegging and backing are two different things.
You pointed that out to me just before we started, and I think that is a key takeaway.
Right. And the other thing is that there's going to have to be some oversight, because look at Luna, look at,
well, that's what this feels like. And it's funny because they're kind of twisting into contortions, saying USDE is not an algorithmic stablecoin because algorithmic stablecoins got such a bad name because they're associated with the demise of Terra Luna. Maybe it's not technically, but I'm from the outside as a non-technical person, it seems to me to be a pretty thin distinction.
Yeah, this was related to, there was a broader crypto crash, like you said, and that was because of the announcement of tariffs. And then because of it was such a bigger crypto market crash, it exposed this race condition, which was kind of a brittle way of doing it anyways. And really it was more Binance. It wasn't like the death of how the stablecoin should work and the mechanics of it, like collateral hedging, redemption was all still there. It was just for less, but it came back in. So that's pretty impressive that it was able to come back.
But again, to your point, for a true stablecoin that is fully backed, there would be no concern whatsoever. For this one, there was to the tune of, a third of its value because it was not fully backed, which is where I kind of get, it's called USDE. And I just keep looking at that going, well, if you're going to call your product USD something, I think it's a reasonable assumption on the part of the user that it's backed with USD.
It's a derivative-based stablecoin, which by definition is not a stablecoin. That's almost an oxymoron in itself, right? You can't be derivative-based and stable, and so and the derivative version of it is based on exchange infrastructure, the trust in the book, but most importantly, the liquidity connectivity. And what the margin on that looks like. The problem is that there's a margin at all, because by definition, if there's a margin, supposedly with the Genius Act and everything else, and no yield, then you don't have a stable coin. You have a synthetic derivative based coin, which it shouldn't be thought of as a pure stable coin. And I'm just thinking that down the road we're going to know more about that.
And that's the piece that I could keep coming back to on that is I don't think anybody owns the trademark on USD. So it's like, how do you get, a regulatory body? I know how much, the current administration, we've set things up. People don't like regulatory bodies, but it sure looks like somebody ought to have the ability to, police who calls the things, what they, the name, the nomenclature, because calling something USD that isn't, just to me seems like a recipe for basically polluting the entire industry. Because what about all the other coins that are playing?
I'm creating USJBD today. It's a derivative-based super stable coin. For every dollar you buy of my stable coin, I give $1 to myself. And so, again, it's derivative in the sense that it derives, it derives value for John.
And I'm also thinking you can call it
that's the derivation.
And you can call it USD because it refers to Uncle Sam's drive-in.
My Uncle Sam
had that drive-in, and people can use the stable coin to pay.
Right.
And then so it's
theoretically, stable coins also exist. Not theoretically, in reality, stable coins exist for other currencies. It's not like there aren't other currencies that are considered stable coins. Which is
again my point that I've been saying. This kind of blows me away. That yes, you are correct, and I was stunned when I saw this statistic because you can do a stable coin backed in euro, you can do it backed in gold, you can back it in anything 1 to 1. But the free market, for lack of a better way of putting it, has basically voted and said that 95, 97+% of stablecoin out there are dollar backed. So at the same time that we're hearing that the US dollar is kind of losing its primary role, or it's just kind of gradually eroding around the world, this is a pretty telling indicator that when a push comes to shove, that's the way people actually still want to transact.
I guess.
Well, with that, I mean, this is if you want to go create your stable coin, please don't call it USD unless you back it fully. And
well, I'm going to back mine fully, but not with US dollars. Mine's going to be backed with dirt.
US dirt.
US dirt. That's
absolute
why it's USD.
100% certified US dirt.
For every coin, there's a grain of dirt in my yard, and so
and you're willing to
a limited supply, but it's there. I can back it.
I think you could have an audit that would stand up to that. You could.
I think so too. I think I just shovel it in a bucket, give it to them, and we can figure it out by weight.
And we can even.
No, I think people need to be careful.
Yeah.
And it's funny because it kind of just goes back to this. Like Binance is the primary player for that because that's their way of getting in and out of it. So, for people to do, trading between dissimilar coins and whatnot. And now you find out, well, wait a minute, it's not a pure stable coin, it's synthetic. So, but anyways, just know what you're dealing with.
Yeah.
Look it up.
And as always on these things, there will probably be more to come on the topic.
Oh, there will, because where there's one, there's more.
True. John, another real-time topic I wanted to touch base with you on. I'm sure you saw the story as well. That I guess it was one of those kind of should have seen it coming eventually. OpenAI striking a partnership with Walmart in terms of ChatGPT integration.
Yeah, but not from the perspective you would think. It's not a corporate partnership. It's a consumer-facing partnership. Basically, what it looks like using ChatGPT to be a personalized shopper for you on, within the Walmart, retail space.
Can I stop you for a second, Jack? Can you move in a little bit? You're fading out.
Oh, sorry. I'll repeat. Just start over.
Go ahead. I'll do the whole piece again. John, another real-time news story I wanted to touch base with you on is the partnership. I probably should have seen this coming, but it's maybe inevitable in this world of OpenAI partnering with Walmart for a ChatGPT integration.
Yeah, when I first saw it and I saw the headline, I was like, oh, that's old news, because one of the things Walmart did initially when AI came out was they were right away said, hey, we're going to give this to every employee, to use within Walmart. That was something that they had said right away. And I thought it was a staff-facing thing. But to your point, and you look closer, this is a consumer play. And it's right on the heels, by the way, and this is no coincidence, of OpenAI announcing an application or an app store, this past week or so.
Right.
I don't know if you noticed that, but they announced an agent app store, which, if you and remember, they hired Johnny Ives. For those of you that don't know, Johnny Ives is the guy behind basically the iPhone ecosystem for
probably
Apple.
Outside of Steve Jobs, the single most important name to know for the true ascent of Apple.
Yeah, the true ascent of Apple with regards to iPhone. And so to me, it looks like they're following that same path at OpenAI. But in this case, it's interesting because in the case of the iPhone, first they announced the device and then they announced the App Store later on. In this case, it looks like we're getting the App Store first because we already have devices, and the devices yet to be seen yet. But this to me feels like a play in that space. But here's why it's important, I think, is to me, this is another opportunity for, card on file kind of a use case, right? So yeah, it'll shop for me, and presumably it'll check out using the Walmart checkout app, which currently supports, nothing like, it has like a Target type feature, but they have their own credit cards, they have their own banking that they're constantly selling. And so what does that mean for shopping, right? So we've been fighting hard to get our cards in top position on card on file, use cases like Amazon and even in things like entertainment, like streaming services.
Sounds like Apple
But
Pay
this is
all over again.
right. And I said, by the way, early on that I would like, if it was, one of the things I think I said very early on in this process, I bet you can go find it in the podcast somewhere. But I said, if I was looking to capitalize on this as a credit union, I would offer some sort of stipend if you use our card to pay for your Anthropic or your Chat GPT or whatever agent you're going to use. Because that's how this is breaking down. It's breaking down to me a lot like Android and Apple. In this case, it's looking more like Google, Anthropic, and OpenAI, right? Which I would equate to Apple, Facebook, Microsoft, and Google. It's like things are breaking sort of along those lines with regards to agents. And obviously Microsoft threw in with OpenAI. Anthropic spinned out to its, which was increasingly impressive. Anthropic, they're a surprising dark horse, in my opinion. But every one of those is going to come out, with something, because they've got to find a way. They're all losing money on their services. They've got to find a way to pay for their services. They need more people using it and more subscriptions because, there was a great article about work slop. Have you heard this term?
Yes.
Yeah. So work slop is very interesting. And then you look at like what they just came out with Sora 2. And I'm guilty of this. I like, I'm going to make my dog play drums. But, how many trees did I kill? And how much resource did I use to make my dog play drums? And I think that's going to begin to be a thing in the future. There's some great articles about what that takes, right? So
I'm
they're
just
going to
thinking,
continue.
like on your receipt, I know at one of my former employers, at the bottom of every receipt that I got, my travel itinerary, it showed the carbon, the carbon.
Yeah, your carbon emission, what you saved. Like, for example, in one of the areas you see that very prominent in is the rise of the surveillance devices for your home, things like Eufy, that all, use solar. And when you go look at your thing, it tells you, hey, by charging your battery this way or using the solar, you've reduced your carbon footprint. But let's get out of that.
Okay.
So point is that agents are going to shop for you and they need to check out and pay, no different than DoorDash and this is a step in the direction of bye DoorDash. Now a robot shows up here in a Waymo, and then another robot jumps out of it that's really already in the back seat sitting there waiting to go with all the groceries in it. He just kind of rides down a ramp, drives up, dumps it on my front step and leaves, right?
Takes a picture of it too. Got to take a picture of it.
He'll take a picture of it, yeah, or she'll, or they. But yeah, this was very interesting. I think this is more of a wait and see moment, but because I'm still curious as to whether people actually use it or how much they use it. But I do know for a fact, based on just my own personal observations, that many, many, many people are already using this ad hoc to shop.
And
by this I mean ChatGPT or the major Copilot or any of the major agents.
I agree with you that it's not going to have an immediate impact, but it's something to watch. I've got a much kind of more, I don't know, that's not conspiratorial, kind of a darker concern about it. And it kind of,
AI knows what you're buying.
Well, no, not even that. AI influences what you're buying, because as you pointed out, they have to find a way to monetize. Well,
yeah,
partnering with Walmart is step one in that, and this feels very much it's the next stage of basically eroding the long-term dominance of web search. Because
so here's go
ahead.
Yeah. So here's my analogy. I love what you just said. I'm going to give you my analogy and you tell me if I'm on base. So if I go to the grocery store today, when I go down the aisle where they keep the ketchup, something very near and dear to me as a Midwesterner, Missouri boy, Heinz is like eye level, right? When I walk by, like Heinz is right there. It's the easiest thing to grab.
Right there at eye level. Yep.
Right. Hunt's, objectively good ketchup. I've never turned down any Hunt's ketchup. It's not like for me, the difference between Hunt's and Heinz isn't like Pepsi and Coke. Like if I got a choice between a Diet Pepsi and like their version of Sprite or whatever it is, 7-Up or whatever, I normally would choose that because the Diet Pepsi, just something about it just isn't quite the same as Diet Coke to me. So there isn't this brand sort of interchangeability a problem with the ketchup. They're both about the same. But for, Heinz pays more money, I guess, because they're the bigger brand, to have that optimum space, eye level space, or really your reach level space, I think is what I would
Yeah,
call
I
it.
mean,
So it's
because
easy to put
then
in
you
the
get
cart.
some random brand that's like very local and low budget that's like down by your feet, and you have
Right.
to like bend over if you actually want to grab.
Now, yeah, and now you extend this paradigm to AI, and AI's got a choice to tell you about ketchup A or ketchup B, and Heinz gave OpenAI more money than Hunt's, and so now, but there's another interesting angle on that too. Just throwing this out there. It's also possibly an incentive for people making stuff to give AI their information. So if I want AI to sell my product, then I want them just like I give it to Walmart. I have to give Walmart my dimensions, the weight, all of those things. And now AI will have access to all of that, presumably via the Walmart app. But there might be even more that they could give, like, hey, I've got a nut allergy. I do not want anything, period, because it could kill me with a nut allergy. And I want to go deep on it. I want to know if it's got, if it's ever seen a nut before, or was, drove by a building that had nuts in it on its way to the store. I mean, I think there's a lot of nuance that's going to go into this. I think you're right.
On this one, you're the glass half full guy, and I'm the glass half empty guy, because I'm hearing again the way people learn to, game the system on search engine optimization by putting weird little words in the frame that still like actually kind of attracted things and pushed it higher in the rankings.
Oh man, I watched this incredible video about that. Anthropic put out a video called "Reading AI's Minds." I'll send you the link. It is by far the most I don't know, the most prolific thing I've ever watched about how AI works and things. And it's not any tech guys. It's almost, I think they're all neuroscientists that turned into tech guys Anthropic went and got. But what's interesting about what you're getting at is that not only will AI, you remember the old the Target issue that happened many years ago where they sent a catalog. They derived that a young lady who was under.
Oh yes,
that she possibly was pregnant. Turned out she was pregnant. So basically,
knew before her father.
Right, because of what she was buying. So she bought this, and this, and those three things together from Target's perspective usually means someone in the house is pregnant. Ergo, we send them a catalog that has a few more baby things in it than we do the neighbor next door who we don't think has any little kids or soon to have any little kids. And the father took offense to that. Now take that and multiply it times 10 trillion as to what AI could do with that, especially once it knows everything you're buying all together from different stores as well, possibly. And AI has an understanding of you that Target will never have. Because do you know what I think it was MIT or Harvard says the top use cases for AI?
I've got something in my head and I'm not going to say it.
Therapy.
Oh, okay.
And
Mine started with a P.
What's that?
Mine started with a P, and I'm not good.
That just came out too.
OpenAI
announced that for certain users, it'll now do erotica.
Yes.
Which is code for porn.
Which is also code for, hey, we need a new revenue stream.
Right. Yeah. So these are all interesting things. It's all revenue stream, but yeah, I think we got to keep an eye on this space. Oh, by the way, Amazon announced the same kind of thing that Walmart did.
It's interesting because you're still coming at it, from a different angle than I am. That it knows lots about you. It can serve this stuff up, which can be done for good or bad. I'm coming at it from how can we trust the stuff it's serving up? Now we're back to that whole paid placement. You got sponsored ads in search. That happened as well. Even in something like, and if it says sponsored, it's a little bit clearer. The shelf space analogy is a great one, but you still get to make the choice. It's not telling you very specifically, this is the one you ought to buy. I'm more concerned that people are assuming, it may be a matter of consumer education, it's coming out of AI. It has to be factually accurate. And the more people can fudge that, because the example I read was, tell me the best mattresses under $1,000 I could buy. Walmart ain't going to serve up mattresses that are the best under $1,000 if they don't stock them.
Yeah, they certainly aren't going to show you the whole online mattress craze. So, but there's something you just said that was, oh man, I lost it. It was something you said that made me think that. So as they go through and they know how can you trust the data? Oh, I remember now. Consumer education. So there are some things that you just know. Like for example, um, I go to if you go to a game, oh no, hotels. This is a great one. So you ever been in a hotel and like all the drinks are Pepsi products
Yeah.
everywhere, right? You just know that, hey, Hilton or whoever, they are Pepsi people apparently. And for the most part, you can go to some stores, I guess, in other states, and you're in Georgia, so it's probably all Coca-Cola there. But you know that brand, those two, they have a deal of some sort. Just like when you go to some fast foods restaurants, uh, that they're only going to have the Pepsi products, like
Right.
Taco Bell, and that hasn't changed. They still haven't gone to where they've got the other things. I wonder if it's going to break down along those lines to some extent, where that like OpenAI is sort of affiliated with these guys. I don't know.
Doesn't that, I mean, and it may be just inevitable. My favorite phrase, money changes everything, but it doesn't that basically violate the initial promise of AI? I mean, maybe it's just an inevitable piece in consumer education. You can't, unless you are incredibly good at doing your prompts, you are, or maybe until you move in, that once you move into the Walmart experience, you have to treat it with a greater level of skepticism. There's this belief that you're getting the unfiltered truth.
Yeah.
I've never believed it, but that's what the belief is.
Well, if you watch that video I sent, that'll help you.
But I'm saying, and this is just one more reason. It's like, okay, well, there's other people who are still trying to influence.
And that's where it gets interesting, where I think AI is going to break down into two kind of categories over time. They're kind of already there, but there's the AI that OpenAI is running, which is, Stargate level, facilities. You see these flyovers of things they're building in Louisiana. I don't know if you saw those articles about the data centers they're building there. And, that's where your dog playing drums are being, created, that sort of thing.
Really useful stuff.
Right. But then there's local AI, which is running on a box that you can buy, domestically from Best Buy. That, by the way, is pretty damn good. We'll give you a lot of information. So it may come down to consumer education to know, like, hey, I can make my own Taco Bell taco, or I can go get one from Taco Bell, but there are going to be some differences no matter what I do. But I need to know what differences there are and which one to use in what situation, depending on what I need.
That's a fair point. Like I say, it's probably natural evolution. One of these rare cases where I'm starting to actually see Elon Musk's point, though, with OpenAI. Yeah. I don't know how closely they're keeping the not-for-profit and the for-profit piece, but this feels like it's moving pretty far onto that one side.
Yeah, because if you're a hammer agent, everything's going to look like a nail. No matter what you do.
Exactly. And not only that, but the prompts. I mean, it's, and that's, become more and more common as people understand that it always is trained. All these models are trained to keep you engaged. So it always asks the next, would you like?
Oh, I'm going to throw a crazy, we were going to talk about this on a future podcast. There's like a couple things about to happen. They're going to turn all that in its head.
Great. Well, let's leave it at that.
The word is diffusion, if you're curious out there. And for those of you that are interested, go sign up. Just do a search for Gemini Diffusion and join the wait list.
Gemini Diffusion. I will put that in the links. John, more to come, I'm sure.
Glenn, as always, this is interesting times to live in. When we started this podcast, I never imagined we'd be talking about this.
I'm not sure I imagined it a year ago.
Yeah, to be fair.
With that, another episode of the Big Cast in the books. I want to just mention, by the time you're listening to this, I'm probably kind of maybe even on a pit stop in between stops on my road show, Money 2020, going on the week that this episode is going live on October 26th through the 29th. And then Venture Tech the very next week after that, November 3rd through the 5th down in Frisco, Texas. If you happen to be going to either of those, do stay high. I will be at both locations. And as we pop back in for the next episode of the Big Cast, we should have some interviews from Money 2020 and soon after that from Venture Tech. So, and probably posting some blogs along the way as well. If you're interested in finding out more about those, follow along. Always probably a good idea, if you're interested in this type of thing, to subscribe, follow, like, whatever you do at your podcast provider of choice. We're always available on Spotify, Apple Music, Amazon, etc. Or you can always just go to the Best Integration Group website, big-fintech.com. The media tab, you've got the current episode, as well as a lot of past episodes you can catch up on as well. My name is Glenn Sarvati. If you want to get in touch with me, my firm is 154 Advisors. You can find the Best Innovation Group and our Grand Poobah John Best on LinkedIn, on most of the socials, and right there at the big-fintech.com website. As always, we thank you for listening and hope you check in again next week.
Check back each week for the latest from the Big Cast. Or better yet, we hope you'll consider subscribing for free via Spotify, Stitcher, Apple, or wherever you get your podcasts. If you have questions or comments, we'd love to hear from you. Tweet us at Big Fintech, email info@big-fintech.com, or visit us at big-fintech.com and click on the Media tab, where you can post a comment or check out our archive of hundreds of past episodes. See you next week.